So today the European Central Bank raised their interest rate by 25 basis points from 3% to 3.25%. So what does that mean for the European Central, the EU economy, the European Union? And also, what does that mean for gold, silver and stocks? Hello guys, welcome back to my channel. So in this video I'm going to be talking about today's European Central Bank base rate raises. So today they raised it by 25 basis points. You might, if you watched my video yesterday, you know that yesterday on the 3rd of May, on Wednesday, the US Federal Reserve raised their base rate also by 25 basis points from 5% to 5.25%. So that was yesterday's video. But today, the European Central Bank also raised their base rate as predicted, because normally whatever the US Federal Reserve does, other European banks do the same thing. So I think that the Bank of England will also do the same thing. I think they're going to be announcing their rate hikes on the 10th of May. So we could potentially see the UK also raising their base rates. So as explained in the previous video, the way interest rates affect gold, silver and stocks. For stocks, raising the interest rates raises the cost of borrowing, and companies are heavily reliant on cheap borrowing money, because a lot of companies have loans that they use to set up their business or to buy stock with. So another reason is that a lot of the demand is caused by consumer spending. So most of the companies like supermarkets and stuff, and like other shops, they rely on demand from customers, but many customers buy products using credit. So if the cost of borrowing has gone up, it's also affected the demand side of the equation as well, which means that if consumer demand has gone down because of a higher cost of borrowing, then sales for companies will go down, which means that the profits of each company will go down, which means the stock price will go down. So stocks will go down as interest rates are raised slowly. But what this means for gold and silver is that as people panic to escape out of stocks, people will buy gold and silver, pushing the price of gold and silver up. Because gold and silver aren't a business; they don't have a balance sheet like a company. So it's more of a safe haven asset. Gold goes up on average 10% per year in the last 40 years, and silver does something similar as well. So and they're physical assets which you can actually hold in your hand. See, like the silver coin, is worth £20, and this one is worth 1,600, at least 1,600. The spot price of gold and silver have gone up recently, as we've heard of the recent bank failures. I think on Monday there was a bank failure called First Republic in the US. So that's what's also caused the stock market to go down a bit and gold to go up. That's why the price of gold and silver is going up, because people are losing faith in the banking system. Banking crisis is getting worse, and in the UK is expected to announce their interest rate increases on the 10th of May, which could be following the same thing that the US did, raising it 25 basis points. So right now the US is at 5.25% for their interest rates, and the ECB, European Central Bank, is at 3.25%. So if they keep raising the rates, then the stock market will go down because of the raise in the cost of borrowing, and gold and silver will go up. So if you own gold and silver, it's a win situation, but be prepared that the UK could raise their base rate soon. So, and when investing in gold and silver, I would say to invest on a regular basis. Don't buy too much at once, because it's better to get an average price instead of accidentally buying at the top. But in the long run, the price of gold and silver will always go up. It goes up on average 10% per year, as mentioned earlier. So anyway guys, if you like this video, please hit the like button and the subscribe button, and I'll see you in the next video.